into the bullish order block in the background, bounce, into the bullish order block in the background, bounce, 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 bouncy, 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 da, 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 da. And if we go to the top side, 36.34, sell side, back into the 36.14s, buy side. I mean, it's just been brilliant, really. I mean, every swing's $1,000, by the way. So if we'd managed to get into this narrative early, it was $1,000 on the way up, $1,000 on the way down, that's two, $3,000, $4,000, and then a bit of loose change on the second one, maybe $4,500 of rotation so far, guys. $4,500 of rotations on the S&P per contract. If you're a 5-lot trader, you're probably sitting on somewhere in excess of $10,000 to $15,000 already this morning. If you started at 6 o'clock this morning. What a beautiful series of swings and roundabouts, just running inside this little narrative, inside this little bracket from levels that you had from last night's tweets. I said I didn't like the buy on bonds. I was right. I like the sell on bonds, though. I mean, the sell on bonds was still pretty good. So if you were with me on the storyline of this narrative so far, it was relatively straightforward just to keep working that short sell side on bonds. Not a lot of delta selling coming in, but at least we've got the tick delta coming in behind us, giving us a little bit of confidence to keep the working and of the short sell. Did anybody short sell the bonds with me? I did make a narrative that I wasn't buying it. I was closing out my short trades, but I wasn't buying it long. My job is to try and be net short just now, as you know, because, well, it's concession time. You know, we're trying to get as many short sells in as we can. Are we running out of concession? Have we already priced in the concession? Yeah, looks as if we're starting to get to that point where we're starting to price in the concession process. If you took the short sell with me, it was a relatively straightforward area to look for. There was a technical level in the background with a little liquidity level in the foreground just there. Ran the stops, got the sell into the 30s, and we're back at bottom edges at 20s again. Who took it with me? Loads of people? Yeah, I didn't want to buy any bonds. I didn't want to buy any bonds at all. I don't want to be long bonds. So I'm not interested in looking for long bonds at all. Sell side bonds for me, concession process, and it's been in the concession process obviously when we start to see the beginning of the month here. This is our concession process here. We want to try and be short when we see the concessions coming in. If we know that we've got an interest rate move at the next Fed meeting, which we will have obviously, we always try and draw an angled line just to give us some idea about where we're going and how fast we're going to get there. So when we're looking at this trade narrative here, we're starting to see the storylines. Now, we're starting to jam into this, which is why we bought it yesterday. We're starting to jam into this area, as I said, which is why we bought it yesterday. We're starting to see that storyline. We saw, you know, kind of a bit of noise in the overnight session with the Bank of England going bullish. You know, that gave us a great opportunity to sell bonds this morning. I did buy bonds earlier on this morning to see if we could get a bit of upside against that fast money move higher earlier. But when you started to see it struggling at the halfway, you're starting to think, okay, double distribution down, double distribution down, double distribution down. You know, and we've obviously done okay, but as I said, I don't think we've got much to the downside to make in terms of opportunities. So I'm quite happy to sell pullbacks, book profits, as you can see, lots and lots of circles into these low prices, booking into these low prices, just to make sure that we're in nice and tidy trades, and then wait for the bond auction, and then we'll take it from there. So for me, sell side business. If I'm going to buy, I'm going to be watching my gold market to buy into a narrative, because obviously I can scalp gold a lot better and a lot easier. So I'm going to be watching the gold market for opportunities, and I have taken a lot of buys on gold in the last short while. We managed to get some buys for that swing, scratched out at +1, managed to get some buys there, we lost value, managed to get a buy here for the squeeze, got the squeeze, scratched out again +1 on the remainder. Haven't been able to pick up a long gold trade since then, back into the bottom edges. So back on the sidelines for gold traders. Obviously, a lot of noise this morning around Bailey's comments. Bailey's comments came out at 5 o'clock this morning, so before all the London bond guys got to their desks, Bailey was kind of, in some ways, tidying up in some respects some of the stuff that had been said and mentioned, because it needed tidied up. People were kind of left wondering, and Bailey did a very, very poor job of communicating. And perhaps it was the market's fault, but usually it's not the market's fault. It's usually the person themselves. But Bailey, to me, seemed to do a very, very bad job of communicating exactly what it was and exactly how long for and exactly what size and all that kind of stuff. And it left a lot of bond traders scratching their heads about what are you doing and how long are you going to do it for? So Bailey's came out, tried to clear up at 5 o'clock this morning, tried to clear up some of the misunderstandings and misreads that the market had maybe taken from what it had been saying. Didn't do a very good job of that again this morning. And then we've had Lane coming out. We've had other commentators coming out, other mentions, trying to do the same job of fixing what was mentioned in terms of what Lane was up to. But again, a lot of misconceptions and a lot of people kind of looking at the markets and saying, I don't really know what you are up to. I don't know what you're wanting. I don't know what you're looking for or anything like that. We know that if we're going to buy bonds, we buy bonds at 1300 hours on the dot. If we're going to sell bonds, we sell bonds at 1300 hours on the dot. And that's when we trade the bond. We start trading the bond at 1300 hours. It's our one thing that we always do, isn't it? Anybody that's been on the bond desk in this room for a long time, as we always say, don't think about 20 past 1. Think about 1300 hours. If you remember the quick start guide, the one time we said that you should be always trying to get positioned on bonds is 1300 hours. Correct? Yes or no? If you've done the quick start guide, the answer must be yes, of course. Because by 20 past, that's when the fast money hits. That's when the fast money hits. It's like 2 o'clock for the NYMEX Open. You don't want to trade 2 o'clock. You want to trade just before 2 o'clock. You want to be in a trade for 2 o'clock if you have a clean shot at something, so that when the 2 o'clock hits, that liquidity is what's going to sweep the price in your direction. And that's what we've got to see in terms of the trade. We've got to be looking back towards the value. We've got to be looking back towards the narrative coming into 1 o'clock for the bonds, coming into 2 o'clock for the oil, coming into 2 o'clock for the gold, and coming into 2:30 for the equities. We try and get positioned prior to the event that takes place, whether that event is the cash open, or obviously if you're a news trader, if you want to try and trade events and you've got a clean read, then of course a news event, for example, would give you something to maybe work with. All good? All good. Take a look at the DAX today. We talked about the DAX yesterday, and we highlighted that previous day highs and lows are very, very important, as well as the POCs. And you can see what happened today. The highs and the lows from yesterday are just exactly the same in the highs and the lows from today. Crazy, right? Crazy. The POC has still been very much in play from this morning's session. It looks like we've got a very, very obvious P shape forming for equities today, bullish on downticks from what we can see, balance holding at higher levels. Of course, we're building in a microstructure. We are building a bearish distribution, and obviously we have been bearish off that bearish distribution. You can see the selling opportunity against that top line coming in just there, but obviously against the POC, a nice opportunity to buy it. Where do you think the bulls would have to take control of to take the market bullish? Well, relatively straightforward, because we can see the fast money moves to the downside. We can see it kind of changes in this area to a more level 2 buying phase. And you're thinking to yourself, okay, well, that would make a lot of sense. Well, that gives us a level, doesn't it? It means that if we can catch a bid above this price level here, around about the 250s, if we can catch a bid above here, then that would open the door to the bulls to take back control of the board. So what you're looking for is something that looks maybe something a little bit like that. In other words, you're needing to take out this phase, this balance area phase here, to take control of this area here, and that might well open the door to a retest of the prior swing highs. we've always got to try and take something out. We've always got to try and take out the last of the sellers. We've got to take out an idea. We've got to have something in mind when we see something like this. Yeah. So that's the DAX, S&P, gold. As I said, there's been some benchmarks that you would not believe on gold today. They have been very, very, very good on the benchmark gold trades. Dollar, obviously, the dollar on a reasonable bid just now against something like the yen. That's allowing us to keep selling bonds short. If anybody's still short bonds, you've just had another sell coming in there at 133s. It's done okay. We've went 133s down to a low price of 24, 25s. Anybody with me on the 133 short? I mean, it's sticky at the bottom edge, so we know that this is difficult here. We know it's difficult. This is a fast money reversal off this at 1 o'clock, surprisingly enough. A fast money reversal, so it looks like the sellers have seen enough, and that's not surprising because we've seen enough into this price. This was the price we bought at yesterday. In the background, you'll remember that this is the price that we bought big style at yesterday for that very fast response and this very slow grind back into this price area. So this looks like it could be the threshold for the sellers at the present moment. But we're willing to try it out. We're willing to test it out, see how it goes into the US cash open. So for me, it's working sell side off higher prices, not lower prices, because that move off the bottom edge was far too fast to sell any lower. So you should not have been selling at 29s and 30s. That would have been madness. If you had, you've obviously just been stopped out at break even anyway, so you're off the trade, so no danger to that situation. But certainly selling into 31s and zeros, working some offers would have made some case reasonable. But as I said, you shouldn't be trading into fast money in the first place. Elsewhere, guys, not very much to add. There's very, very little. In terms of numbers, we've obviously seen some numbers of interest this morning. Let's get through what we have seen. UK GDP month on month did come in at minus 0.3%. Remember, the GDP is a backward-looking indicator. So obviously those retail sales numbers that came out the day before from the overnight BRC, you're obviously looking at that and saying, well, that's not going to work into GDP numbers for another month anyway. So we got a disappointing GDP number this time, minus 0.3% month on month. The prior was revised down to 0.1%. So obviously that's not a good number. But what was a good number? It's good trades balance number came in a little bit better. Index of services came in a little bit better. Industrial production was a little bit worse. Manufacturing production was quite a bit worse on month on those numbers. So a pretty poor set of numbers for the UK, but they're not really having a big impact on the pound just now, simply because everybody is watching Bailey. Everybody is watching Bailey just now about what Bailey is saying, what Bailey's doing, and what Bailey's screwing up the next time. So we're obviously going to be very, very mindful of anything that Bailey says just now that just adds a little bit of clarity to the overall position. See how the markets respond to that, because that's driving the market more than pretty much anything else just now. Also this afternoon we do have some data out, important data at 1:30. It's the early inflation numbers, it's the PPI numbers this time, 0.2% positive against a minus 0.1% prior. Core numbers expected at 0.3 against a 0.4 prior. IMF meetings all day today. IMF did give an updated forecast on the UK's health, actually suggesting that the UK would outperform the G7 next year in terms of performance, in terms of growth. So that's quite a bonus for UK markets. But IMF meetings today as well, day 3, of course. And that's what we're looking at. Obviously tonight, massive information tonight from the 10-year bond auction. The concession process coming to an end today, obviously. 10-year bond auction at 6 o'clock tonight. And obviously after that, we've got the FOMC meeting minutes. So we've got a lot of business on bonds tonight to get busy with. And obviously that's us, as I said, coming to the end of the concession process. Tomorrow we have the better information. We have the CPI numbers. Brilliant information, obviously. CPI numbers tomorrow, 0.2%. So it's going to be difficult to get a read with the Fed minutes, kind of clouding everybody's picture on the for inflation tips, for example, being something that could be all over the place tomorrow. CPI numbers at 0.2. The CPI year on year at 8.1, the core CPI at 0.4. So lots of numbers to think about for tomorrow's inflation. So tonight at the close, the tips markets, let's see what the direct dealers have for us. Let's see whether they're bullish or bearish and take a read from those numbers. For me, it should be a relatively quiet bond session from here on in. I'm not going to get too involved in the markets. We've finished the concession with a massive profit this month. Remember, the concession process starts at the beginning of the month. The selling came in at 140 evens, Reeve. 140 evens. We're currently trading 132.5. That's a $7,500 profit on the concession. Who says that bonds can't produce a massive profit? $7,500 sticking with that concession process this month, guys. Is that pretty good? Damn right, it's pretty good. So we try and trade the concession as much as we can from the beginning of the month. If we've got a hot Fed this month, then of course that's what we're obviously trying to play, is that big concession process. CPI tomorrow, Fed minutes tonight, 10-year bond auction tonight, 30-year bond auction tomorrow. The concession is finished. We have finished the overall concession process. We're flattening out our massive positions today. We're taking as much profits at bottom edges as we can, and we are good on that trade. We are absolutely rock solid on what we're doing today, and that is just basically clearing books. So that's us. You won't find me trading bonds much this afternoon. We'll wait until we get into the meat of the evening session, and then we'll be back on the bonds, I think, today. So for me, probably more inclined to be on equities, gold, oil, trading those kind of markets, and just avoiding the bonds like the plague, whilst the noise and the profit taking and the rebalancing and everything takes place ahead of the 10-year bond auction concessions. All good.